Good evening, everybody. All right, hope everybody's having a good. Oh, this is already mid-November. Geez. Last night was one of those nights where the wind was so bad that it had a little bit like the sound of that freight train prior to a tornado. Went outside just to make sure none of the cars are under any tree problems, and it was scary. I made Sandy go downstairs because it did sound. The wind was so bad it did sound like something was coming. All right. As we can see, we're still in what looks like to be a wave 3, but that's not to say there won't be some backing and filling in here. Today we did kind of a doji day in the Dow. Not so much the fact that we did a doji day in the Dow, but the Dow was trading up 50 points at one time. And at the same time, the NASDAQ never really got started. So there was kind of a divergence there. Not to say there's any reversal coming in this market, but I would guess there's some profit taking, which isn't bad for this slow uptrend. That's right. Okay. And then the S&P 500, kind of in the midway, did a bearish engulfing signal. I wouldn't be surprised to see if they don't come back. Notice that the 20 is now acting as a support level for the S&P 500. So I would just expect some profit taking. And before I get too far along, folks in the WOE room, it's kind of quiet right now. That's just because, again, my schedule is tied up. I was hoping to have my desks here today. Once we get settled in, or once I get settled in, we're going to have lots of activity in there. So be a little bit patient. And also, somebody else was kind of making a comment that that they were fairly new and the picks weren't all that spectacular. So that helps me kind of describe more what you're trying to learn based upon candlestick signals and candlestick analysis. I mean, for the last 2 weeks, where are we? We're near the top of a trend versus the bottom of a trend. So a couple things are going to happen. Usually the picks that you're going to see up in this area probably have to be much more, when I say watched with more diligence, because we're running out of steam up here, probably running out of steam. Whereas something down here that's recommended, when we're coming out of the oversold area and looks like we could go back to the top of a trend channel, that's going to have a lot more upside potential. So what I really want to convey is this is not a stock picking website in the sense that we're going to show you picks that are going to be fantastic. What we're going to be showing is picks that have good probabilities of working, but also more toward teaching everybody what to do with the right investment atmosphere. Right now, longs, if I'm buying something long, it's on a much shorter fuse because we're way up here in the overbought area. I would expect some backing and filling. Whereas down here, buying much more heavily with the anticipation there was going to be a lot more upside was the right prognosis. So don't get caught up in, man, the picks aren't good or they aren't good right now, because there are going to be times when long picks aren't the best in the world only because the market's run out of steam. So we're trying to teach people not only how to invest in the right trades at the right time, but also analyzing when is the right time for being in long. And if you are long, what should you be watching? Again, much more, I want to say, much more tighter trades because we are up here in the overbought condition. So, and that's what and the reason I mentioned this is I don't want people thinking, oh man, we're in here and we're going to get some good stock picks. The probabilities of being in the right place at the right time with candlesticks are extremely good. But knowing when the right place and the right time, what the conditions are, is also a major factor on how to invest successfully. So right now, I'm probably going to start leaning toward a few more short positions in the portfolio because we're in a situation where things look like they're starting to get a little bit soggy up here. So the analysis isn't which stocks are the best or are doing great. It's what is the market conditions and what should we be looking for as far as the results of those positions. So this all goes back to, yes, teaching everybody how to fish rather than giving them a fish. So anyways, Lisa, this is the reason I do this is we all go through the same emotional expectations that we're always looking for the Holy Grail. There is not a Holy Grail. There's just learning how to interpret the market correctly at the right times. And I don't think there's been a reversal. I think we're going to have a little pullback and then watch for the next buy signal. So yes, I would be buying the dips in this type of scenario. All right, let's take a look at some of the other crude oil, still in a downtrend. Notice how it hasn't been able to get above the T-line. The dollar's pulling back, but notice what it did today. A doji, I would anticipate, and that doji close enough to the T-line to say, yeah, if they went positive here, that tells me the T-line was acting as support, and our next target should be up here at the 200-day moving average. Euro looks like it hit the 50, which means if they start selling this off, you've got a blue ice failure, which could take you back down to the 200. Again, the opposite direction of if the Dow pops positive here. And what do we got in the Japanese yen? The Japanese yen hasn't really been that active. It's been relatively flat, as you can see, for the last few months. What else was there? The British pound, also relatively flat. It's in a short-term uptrend, but I would suspect that here's your upside potential. Yeah, and that's, again, all part of the analysis. Are there things that you want to be long in or short in? And, again, Tesla is a prime example of analyze the downtrend. On the other hand, we've made some very good money in some of these. Analyze where the trend was putting you in the right place at the right time. So I, again, point these out because there are going to be a lot of times when it looks like it's time to be in the right position and then get back out of that position. So my whole process for trying to develop a good, profitable portfolio is getting into a position, and as long as it doesn't tell me to get back out, I stay with it. So hopefully at some point, if you've got 10 positions on, they're all working in the right direction, whether you've got 7 longs and 3 shorts, that once it starts moving in the right direction, all right, you don't have to be trading in and out. There's going to be other times where you get into a position. Let's see, I'm trying to think of a few. So this might be telling us it's time to get out. This was a good buy here. Up here, you're up 15%. Might be time to take profits. But again, this was not a signal today. This was just a down day and an uptrend. A dark cloud gaps up but has to close more than halfway down this candle, which it didn't do. So that's also why you want to have kind of a good grasp on what the little nuances are for each signal. And it's not like you have to learn a whole lot on each signal. It's only like 3 or 4 little things. You're not having to learn a whole slew of signals. Basically, what else was I going to illustrate here? Oh, also, we want to be able to identify or understand what these type of price moves reveal. When you see a candlestick signals or patterns setting up and then they gap up, what do we expect to come off of here? Hopefully a 45 degree. Why? Because this was information that was very pertinent to this kind of pattern setup. Came up to the 50, consolidated, blasted through. So a lot of people say, well, shoot, I don't want to buy a stock that's up 10, 20, 30%. You do if the pattern tells you it's the right pattern, because there's going to be obvious, I think I've got the right signal here. No. Who writes this stuff? This type of situation, big kicker signal, big up day, probably a 45 degree off of here. So if we understand what this initial signal tells us, that we have expectations of what investor sentiment usually does after that. So anytime we see a setup like, something like this, we can kind of expect, hopefully we're in a 45 degree from this point. And what was the first one that CADX. So CADX bought yesterday, even at a higher prices, but not concerned, because I suspect this is going to be in a 45 degree. Where's my stop? Right now, I don't want to see it trade back below this point of where the bulls really started taking control. As long as it stays above that level, I know I'm probably in an uptrend. Another one. People were asking, would you hold something going into earnings? Well, today, VISN was still trading in this uptrend, but after hours, it was trading down, like at 9.54. So it's right here. That's after their earnings, which weren't all that terrible. So there's a lot of times where, as long as it hasn't violated our basic patterns, which is a candlestick sell signal and a close below the T line, if it's opening right here, I would still say we're still above the T line and we still have that 45 degree prospect to the upside. Oh, no problem, Roger. I just happened to fall into this business because I was somewhat like most people. Man, I just wish somebody would teach me how to invest. But where are you going to learn how to invest? You're not going to learn it from a professor at a university, because if they knew how to invest, they wouldn't be a professor at a university. You're not going to learn it from most traders, because why are they? You're from Kramer. That's who you're going to get it from. So for years, I love to invest. I started investing when I was 8 years old. My dad bought me one share of Ezor Express, which was a trucking company in the Northeast, and it was at $16 a share, and I had one share, and then it split 2 for 1, and then I had 2 shares at 8. So I was really big time, but I would watch that every single day, and I started trying to learn what made stocks go up or down. I was a stockbroker for 8 years and discovered that brokerage firms don't have any more idea what makes a stock go up or down than anybody else. But it was when candlesticks came along that the common sense built into the candlesticks pretty much told me these signals aren't around because of them not working. They're around because they do work. And that's when I really started making money with investing. Was at least now I can see what the probabilities are of being in the right trade at the right time. So when I started seeing the different patterns, or learning the patterns the Japanese rice traders had identified for us, at least I knew I was in the right trade at the right time, and not every trade worked. So I also had to learn what trades weren't working and when to get back out of that trade. So that was back, I think this started with a long dissertation, that if I could find patterns that tell me I'm in the right direction at the right time, that hopefully at some point during my portfolio positioning, I've got 8, 9 of those positions working in the right direction, and I just have to fool around with 1 or 2. So again, this all comes back to, we're not trying to find the best picks in the world. Well, we are trying to find the best picks in the world, but we're also trying to teach when you don't have a trade that's working, when is it time to get out and when is it time to get back in. And also a reminder too, I mentioned to the members that if you're having problems and you're not doing what you think you should be doing as far as returns, that means there's not anything wrong with the candlesticks, it's the interpretation. So those of you that have called and left a number, I haven't forgotten about you. I will get back to you hopefully in the next couple of days. Just to have some I can't remember what the term is, but some circumstances that I've had to take care of. But when I get settled in here, I'll get back to everybody. Nothing wrong here. This is not a sell signal. All this is a down day and an uptrend. Your stochastics are heading up. You've had a buy signal. You're above the T line. This one I would be a definite buyer if it opens positive and starts trading positive. This is not an unusual move in an uptrend. As I say, not every single day in an uptrend is going to be an up day. But what you have to really visualize is, what is my whole buy signal / pattern? Am I in an uptrend, a downtrend, or sideways? And if I'm in an uptrend, I give it the benefit of the doubt as long as there's no sell signal, no close below the T line, stochastic still heading up. I just have to assume there's going to be bad days there. Thank you, Jim. I want you to still be able to say it. So anyways, okay. Extracurricular. Okay. All right. I'm going to read a few. How do you get into the option room? Is it? Yeah. It's the. If you're a member of the option group, just email Abe, and he'll give you the password. Well, Sam, I'm afraid my Ivy League education was mostly because my mom and my dad were from the school, and they had friends that got me in. Do you care about company / fundamentals, industry group, etc., or is a candlestick pattern all that matters? Tracy, if you go back to the very basic statement about candlesticks, that the candlestick signals are the cumulative knowledge of everybody buying and selling during a specific time frame, that cuts to the chase. That's telling you what people are doing based upon their analysis of that company, their fundamentals, their industry group, everything that has to be associated whether somebody makes a buy or sell decision. We don't care, or I don't care about the fundamentals. And my basic statement when I'm showing people candlesticks for the first time is, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's exactly what candlestick analysis is the graphic depiction of what's going on in investor sentiment. And a true example of that was back in year 1999, year 2000, when the market was just blowing and going. They couldn't put out new offerings fast enough where they collect 5 people, make them a company, give them an internet name. They didn't have any sales. They didn't have anything, But as soon as that stock hit the market at 20, it opened at 40 and go to 60, which is exactly telling you that there is nothing to do with the fundamentals. It was the perception of what that company might be able to do. All right. I have chased a few gurus down there, and Steve, you want to play this own way. All right. John, that's because I've gone through years of hard knocks, and if I can just convey to people to do what I don't do as I say, not as I do, you'll be way ahead. Would you show a sell signal? Here's a sell signal. There's a bearish Harami. There's a bearish engulfing signal. So, Ruben, that should be your first lesson is either read high profit candlestick patterns or just go to the website, and there's the 12 major signals on there. That's your bricks right there of candlestick analysis. When you say opens up, is that the first 30 seconds, first 5 minutes? Anywhere in there, David. That it's the market's not falling out of bed, that the price of the stock isn't gapping way down. That the market's still kind of moving in the direction you think it is, and the stock is opening the way you think it should. That it's not doing something outlandish. When you say one halfway down a candle, does that matter whether your vertical is logarithmic or linear? No, it's just the candle itself. Remember, the important aspect about candlestick signals is the decisions, the opening decision and the final decision. Everything else in between is just noise. That's right. I was reading what Peggy was saying. Okay, let me, stochastics of 1233. Okay. BFR, again, is still moving in the right direction. I mean, because you have a down day, don't get discouraged. What is the overall trend? The overall trend right here on MU is that we've had a nice steady uptrend, but now we have a left-right combo. Makes it very simple. If we know what a left-right combo is, which is a strong bearish signal, we know what we shouldn't see the next day if we want to stay long. They shouldn't open this lower. If they do, more than likely they're going to bring them back to the first target, which will be the 19 or the T line. Don't most of the big boys start trading after the first hour? Ed, we don't care. If you're buying a stock that's supposed to be going up, we don't care whether it's somebody's grandmother or whether it's a professional trader on the street buying. All we're interested in is which way is that price moving based upon what the signal told us it was doing. So a lot of these adages, that we hear through the years don't mean a hill of beans when you can see what the actual signals are telling you. All right, some that you want to take a look at that have potential is LVLT, starting to get this slow curve. It traded up pretty good today, but if this breaks out through this area, that's one to take a look at for a pop that might move 4 or 5 points very quickly. Setups where our timing is relatively quick, meaning that the nice thing about candlestick analysis is it tells us when we can start seeing what investor sentiment is doing immediately. We don't have to be waiting a week, 2 weeks down the road. Here's another one. We have a strong wave one. Notice how this wave one started, a little kicker type signal through the resistance level. Wave one, wave two. What's wave two telling us? They're not selling it off. There's indecision between the bulls and the bears. If they break up through this level, what's that telling us? It tells us the bulls have won, that wave three is in progress of this J-hook pattern. A left-right combo. Oh, what did we see that on MU? Left-right combo is a two signal. It's a doji followed by a bearish engulfing signal, or a doji followed by a bullish engulfing signal. Basically, that doji is that little indecisive left jab, and then there's the roundhouse right that comes right after it. Tells you that that's the direction they're planning on taking it. A very strong reversal signal. Now, the only caveat to that is we better see them trade lower to confirm, because where are we? We're still above the T-line. Do you consider buying above the body of the candle or above the top? The same typical for stops. Yes. And we'll kind of go through that as we go through here. Okay, let's see what else we got here. All right. S.ESI. Here's a case where knowing what your signal and your pattern is telling you, this looked like a good J-hook pattern. Why do we want to see it confirm on the breakout? Because if it doesn't confirm, what do we have? We basically have a double top, which means if they start selling it off, where can they go? Well, right here is they can fill this gap. If they got that close to the 50, they're probably taking it back down to the 50. So a lot of people say, well, why don't we buy in anticipation of the breakout? Because I would rather pay a few cents more, a buck more, knowing that the trend is moving the way it should, than speculate when I know what the probabilities are when this confirms versus anticipating that it's going to confirm. Is that? Yeah, so there's a bearish left-right combo, a doji with a bearish engulfing signal, which means if this opens lower, you probably want to be going short, because this is that kind of that bearish J-hook pattern. And so very simple confirmation. We see a left-right combo, doji, bearish engulfing, and they open it lower the next day. What's that telling us? They're selling off. The T-line's acting as resistance. If this is wave one, notice where wave one started. Smack dab right here on the 50-day moving average with a bearish Harami, confirmed the next day, and they haven't been able to get up above the T-line decisively. This is why you want to see it, the signals decisive going through a T-line. As we can see, this was an indecisive buying and then more selling coming along. Didn't that IYR have an island reversal? It did. But remember, we're buying based upon what we should be expecting. I say, nah, that's not the way to say it. Good possibility of an island reversal. But remember, the term here is possibility. What we want to be aware of is it going to work or isn't it going to work? And the candlestick signals tell us pretty quick that it's not working. We want to be back out of that trade. Call out the symbols, please. All right, I'm sorry. This is IYR. So this is what I had to go through or kind of really get sunk into my head is everybody's looking for that holy grail as far as investing. Oh, no, not one of these sessions. Let's see. Bah, humbug. I don't understand why this thing does this. We're going to give this about 10 minutes. Well, maybe not 10 minutes, 10 seconds. There we go. GGB, all right. Now I forgot what this question was. Oh, I forgot. Anyways, here is GGB. Gap up. Now they've gapped up right to the resistance level. This one you want to be buying because this tells us that this sideways motion is over, but the next uptrend will be in progress. Hopefully this will work. There's that J-hook pattern on USAC, USAK. This one, if this is wave one, wave two, wave three, looks like it has another 2 or 3 points to the upside. Oh, the holy grail of investing. Okay, now, that everybody's looking for that, that person that's going to give them good picks every single time, or the trading method that is just a lay down. If there was a trading method that was just a lay down and it was simple and everybody's making a fortune from it, everybody in the world would know about it. The problem with investing is that we've got so many aspects or so many parameters for making a successful trade that if you don't learn how to do it yourself, somebody that's showing you how to do it or somebody that's giving you picks, if their picks go bad, you have nothing to hang your hat on. Now you've got to go find somebody else that you think is going to give you good picks. I would rather teach everybody what to be looking for good picks. CCJ. Oh, another one in the mining that might be doing a wave. There it is. Nice slow curve, making the next target up here to the 200-day moving average. I would rather teach everybody how to find their own picks, because once you learn how to do that, which using candlestick signals, the visual capabilities of candlestick signals, it becomes pretty easy. Whether you learn all the signals or you learn to trade just off of one pattern or one signal and get that down correctly, now you don't have to rely on anybody else giving you recommendations or listening to the gurus on TV, the talking heads. You can make your own decisions. MNTA. If this opens positive tomorrow, we know what type of signal this will be. Again, there's our little left-right combo. Open positive tomorrow after kind of a doji shooting star. We're not in the overbought area, so if they open this positive, what's that going to tell us? They're going to trade positive. If they trade positive, where are they going? They're going out through this level into wave 3. The black line is the 8 exponential moving average. That's the T line. The T line is a very, a very high probability trend analytical tool that as long as you don't see a candlestick sell signal and a close below the T line, like right there, it'd be very simple. If they opened it lower the next day, you close out the position. That's why you'll often hear me say this one has to open higher and trade higher to stay in it. So one of the, I always go on the simple assumption that if there was a good analyst on Wall Street, everybody in the nation would know their name. So my question always has been, do you know who the best analyst is on Wall Street? And most people will sit there quietly not knowing what the answer is. That's because if somebody was good, everybody would know about it. So there's nobody out there that's any better than anybody else. I don't know if you know it, but the room has been closed down and it really squashes the early morning. Sugar Bear, that's because I had shut it down by accident over the weekend and forgot to open it back up. So the room will be open all the time. I did get back down here last night to open it up, and because of the windstorm we were having. All right, let's take a look at a few more here. Yoku. Have Yoku. Look at the kicker signal. And look at this chart. Maybe I got these charts too big. Look at this uptrend. Look at our pullback. Now a kicker signal that if this is a wave, this could be the next wave to the upside. Whoops, I'm having a hard time reading my own handwriting. Such a strange phenomenon. IPI was up big today, but pulled back, but makes this a very simple trade. If this opens positive tomorrow, you've got a doji type sandwich after a little kicker type signal off the 50, breaking out through this downtrending channel, And I bet you Dynadonis, let's see, if we check this right down through the tops, yes, came right back. Remember, when they break through a resistance level, they'll come back and test it and see if it would act as support. If that's the case, that makes this another wave to the upside. Yeah, I'll get to everybody's individual requests. Just when I tell Jim to do the double line, that's when you want to type in your requests. QTWW, nice big J-hook pattern. This one you can be buying on positive trading tomorrow. Let's make this a little bit smaller this way. Because if they break through here, you've got wave 3 going, which this took us up 5 points. 5 points from here would take you up into the $11.50 area. Let's see, CEMP. There's a scoop type pattern. Bouncing off the 50 area. This one you can be buying with the anticipation of wave 1, scoop, this wave right here being the same magnitude as this wave right here. And highway, whoops. Highway also is starting to come back up. It looks a little bit more healthier than that. Oh, I know why, because you're getting this little T-line squeeze into the 20. If they pop this, their next move is probably going to be popping it back up to the 50, which would fill this gap, and it would also make this kind of a big scoop type pattern. And S.edu, another wave 3 action. That if they break through this level, you probably got another 6 points to the upside. And now, these stocks, XONE, oh, not there. Right there. This one, all you can do is stay long until you see a sell signal. And DDD was up big at one time today. So this one you have to be a little bit careful. There's your big long-legged doji in the overbought condition after a strong up move. If they open this lower, if you own any, you want to close out the position, more than likely you're going to come back at least test the T-line, but we aren't assured of that. So if it opens lower, rule number 1 is if you see a candlestick signal or a doji at the top and they open it lower, close out the position immediately. Stops, yeah, sometimes if you're buying something where it's a good distance away from the T-line, you have to pick a spot that tells you where would be a spot that tells me the bears are in control. On this one, notice how far away you are from the T-line, but they gapped it up. I wouldn't want to see it trade back below this level because this is the level that told me the bulls were in control. If they opened it and took it back down through there, the bears are back in control. I want to be out of the position at that point. So there's going to be times when you start moving away from the T-line, then you have to pick out where would be a signal or a level that would tell you that it's time to be back out of that trade and at least wait for it to come back down and test the T-line. There's a nice little breakout on DBD. Broke out through this sideways channel. Gap up. Probably has more upside. Why I say it probably has more upside is because anytime you see a gap up, especially coming out of a resistance level, they gapped it through that level for a reason. Here's AMKR. You're probably going to see this on the recommended list tomorrow. Notice what type of signal is starting this J-hook pattern. There's our doji sandwich. And with a doji sitting right here on the T-line, if they open it positive, what's that telling us? That they're probably going to have a day equivalent to this day, and if they do, where's it going to close? Above the T-line. If it closes up, what's that do to our pattern? Kind of makes our pattern that much more evident. Why not halfway down the candle after a gap up? Because the strength is showing you that if they gap it up, there's a lot of strength there. There's going to be some backing and filling, but I wouldn't use a close below the halfway point of that candle. I'd still use the open of that candle that told me the bulls are taking over at that point. Now, there's nothing wrong with closing it out on the halfway point, but you just get ready to buy it back if you see that the bulls will step back in again. I'll try to come across some that kind of reflect that type of trade. EFI, there's your little fry pan bottom. There's your J-hook. Notice what it did today. A doji followed by a gap up. This one I wouldn't be afraid to be buying because it tells us our uptrend is still in progress. And ACTG. Here's another bullish confirmation, a little bullish after. Notice we had a series of dojis, a little hammer. Then they told us which way they were going to take it after this indecisive trading. Now we've had a doji type day. What's that tell us? If they open up positive, they're going to move positive. And if they open up positive, what type of magnitude? You probably have a doji sandwich with the same magnitude as that type of candle right there. And let's see. VNet. VNet makes this a very simple trade. As we can see, we have had a nice steady uptrend. Now we've had a J-hook type pattern. And notice what we've had right here. A doji right at the resistance level. Makes this very simple. If they start trading this positive, especially if they came up through this level, that tells us we're probably going to have a doji sandwich setup. That if they had a price move of this magnitude, that means we should be closing up here, which tells us we've broken out through this level, and we are in wave 3. An INFY. Oops. Same scenario. There's your left-right combo. What else is evident? We had a double bottom. Now we've broken up through and we're above the resistance level. This one should keep right on going. We've got stochastics heading up. We've basically got a wave 1, wave 2, wave 3 in progress. Okay, let's see. I'm going to read what Maverick has to say. That's true too. This is why when people are having problems, I tell them to call me, because remember the picks and the chart patterns are all the same. Whether you're looking at Apple or looking at IBM or any stock, if you can identify the patterns, there's going to be some people that make money with those patterns. There's going to be other people that don't make money with those patterns. But if those patterns work consistently and you're not making money with them, that means the patterns aren't the problem. It's your interpretation of those patterns, or when to get in and when to get out. And that's hopefully what we'll kind of keep conveying in these sessions. Do you make a distinction between opening higher than yesterday's close and opening slightly below the close, but then trading up as the day progresses? Is this a significant difference? No. But there's two different elements that I use. When we get in, we'll do a session on entry and exit strategies. One of them, I'm trying to see, here, for example, is a good illustration. That we had a left-right combo. We wanted to buy on strength the next day. However, notice it opened here and probably traded down here. So what's my entry strategy? I just put a buy stop where it opened or closed the day before. What type of candle would it be created from the open? You can start seeing another green candle. If it came back up through the previous day's close after a buy signal, after selling off, what's that tell me? It tells me there's some profit taking, but the bulls are back in control. And what do we expect to see after a candlestick buy signal, or what do we want to see on a bullish trade? That the bulls are still there. So there'll be times when some people say, well, do you buy right away? If I saw this open here, no, I wouldn't be buying. Even if the market was up strong, I wouldn't be buying because they weren't buying that stock right on the open. They take it back down through here, but then bring it back up. If they took it down here and then brought it back up through the open, which way are your charts going to be telling you they're heading? I'd rather be buying when I know the buyers are there than trying to bottom fish. Because a lot of people say, or I've given this illustration many times, a lot of people say, I don't want to be buying a stock, or I don't want to be buying the stock. I'm going to wait for it to pull back so I can get in at a better price. And I always think, why would you wait for a pullback? If it's pulling back, that tells you the bulls aren't there. I want to be buying stock where the bulls are telling me they're in control versus somebody's able to sell it off after a buy signal. Okay, all right. Hopefully it's not a session on entry and exit strategies would be great. Lisa, for you new folks, we're going through kind of a dry spell here as far as training sessions. That's just because I'm in the process of this house move. Hopefully within the next 4 or 5 days, I will be all settled in. Then as we get into the holiday season, as you will see, there won't be as many guest speakers. More time on not only Monday night and Thursday nights doing specific topics, but for members, we'll probably have sessions on Tuesday and Wednesday nights on entry and exit, stop losses, using the gaps, scanning for the best trades. What are some of the other topics that we do? We'll be doing some option training, and there'll probably be some Saturday mornings when everybody else is out shopping for Christmas presents. We'll be sitting in front of the computers doing some training sessions. What is the best time frame to use to see these patterns? Gonzo, I'm looking at the daily chart to tell me which direction things are moving. Then once I see the daily direction, then I'll flip to my 10-minute chart and see. Let me do some, what am I in? Cotton right now. Notice we had a sell signal in cotton. Then it popped back up. Now, is this a time to be buying cotton or selling cotton? Right now it's telling me, even though we're just coming up out of the oversold area, they're selling it back off. So this is where I'll flip to my 10-minute chart and say, all right, where's the points I want to start shorting? So I'll use the daily chart to tell me what my general direction is, and then I'll use a shorter-term chart to tell me what my exit and entry strategies are. Right now, I'm short lean hogs because it failed here at the T-line. It had some bounce today, but it's selling off. So even though I'm in the oversold area, remember, just because you're in the oversold area with your stochastics, and I saw somebody ask earlier, my stochastics are 1233, that you stay short until you see a candlestick buy signal, and especially see a close above the T-line. Zach, I don't know why they call them lean hogs. Bad boy, yes. All our training sessions are recorded. So, all right. Any more just general questions on candlesticks? The 34 EMA, I use that mostly on commodity trading. It works much more effectively over there on commodities than it does stocks. As you can see, we've only got four basic moving averages: the 200, the 50, and the 20 simple moving averages. The T-line is an exponential moving average, and then also We're going to be doing a session pretty soon on entry and exit strategies using the T-line and the 3T line, and combining that with the 5-minute or the 10-minute, 5-minute, and 1-minute chart combinations on how to kind of fine-tune your entering and exiting a trade. Where are recorded training sessions located? In the Eric, if you're in the member, in the member area, you'll see all the recordings. Let's see, a J-hook pattern looks like a J-hook. Let's see, I'm trying to think of which one was it. AMKR. A J-hook, this is what we call the classic. The classic is, whoops. In this case, there's our fry pan bottom. Where did the fry pan bottom start breaking out? Right about where it started. There was a little J-hook. That meant you had a strong up move, then a little simple pullback, and then a little J-hook that took you into the next wave. Now we've got a wave, a pullback. Notice the indecisive trading as soon as it got back to the T-line. Now we have a doji sandwich, which tells us this J-hook pattern should be in progress. So if this was wave 1 and this was wave 3, now we've got wave 1 and potentially wave 3 on here, which could take us up into the $657 area. Do you find patterns and signals fall more often when the major indexes are mixed? Do you find patterns and signals fail more often? No. The other side of it, when the market is moving sideways, and let me see if I can show an example of when that was. Oh, let's say right in here. Didn't know whether the market was starting to roll over or whether it was still in an uptrend, it was just going sideways. Or here's another case right here. That's a time where if you don't know which direction the market is going, which kind of gives you that added benefit of being either mostly long or mostly short in your portfolio, because there are 7,800 trading entities out there, and we can scan in less than 20 minutes each day for the best 1, 2, 3, 5, 7 trades on the positive side as well as the negative side. In a market condition like this, you might have 5 longs and 5 shorts because, remember, the signals and patterns themselves are the accumulative knowledge of everybody buying and selling during that specific time frame. And if they know the market is sideways and that stock is selling off, that means there's something in that stock that we can consider selling off. At the same time, if the market's moving sideways and we're seeing bullish signs in another stock, that means they're buying that stock even though they know the market's moving sideways. When I buy commodities, I'm usually just buying the commodities outright. What charting and screening program do I use? This is called CQG. This is kind of the grandfather of all of them. Lots of the other charting services take their feeds off CQG. But I also use Metastock. I also use TCNet. As a matter of fact, I think Metastock is just going to start their promotion this next week on the quantified signals, which ones work the best as signals and patterns. And then doing some work for NinjaTrader. We're supposed to be doing some work for TradeStation. I know there's 1 or 2 more, and I can't think of who they are right now. The T-line squeeze is, here's an example of a T-line squeeze. I mean, you can obviously see, or we should obviously be able to see, that there's kind of a resistance level. But notice what the T-line is doing to the resistance level. They can't close the market back below the T-line. They're squeezing it right up through the resistance level, which pops them out to the upside. So this T-line squeeze just kind of, there's a resistance level here, and they can't close it below that level. That means they're squeezing it up through that level. Okay, Jim, go ahead and do the double line. And in 2.8 seconds, do the second double line. All right. All right, let's see how. MJN, this one is the exact reason why you don't want to see it trade back below the open or the low of a trading day when they gap it up. Next day, the bears are still in control. And where do the bears bring it? Back into the trend area. This gapped out of the trend area that told us we should be in an uptrend. Next day, they bring it right back into that area. That tells you the bulls aren't very strong. You want to be back out of that trade. SWIR, we recommended this morning because we had a nice morning star signal, consolidation, little J-hook type pattern. We wanted to buy on a positive open. In this case, they gapped it up. And where did they gap it up to? Right through the resistance level. Makes this also simple for tomorrow. If they open this positive, then we've got potentially our doji sandwich, which means they're still taking it up into wave 3. ANW, getting a little bit toppy. There's a left-right combo. If I own this, I'd have a sell stop one tick below today's low. If they brought it down through there, they're obviously going to bring it back to the T-line. One little caveat about the T-line, it acts as a very good support level, but the further away you move from the T-line, the higher the probability they're going to bring it back and test it. And when we see a candlestick reversal signal like a left-right combo, the probabilities are that if they're selling it off, that's where they're going to come back to, is testing it. That's where you want to be ready to take your profits coming down through the low of the previous day. This one needs to open higher and trade higher to keep you in an uptrend. If they open it lower, that tells you this top resistance level was hit, and they're bringing it back down, probably as far as back down to the 50-day moving average. This one you can be buying on a positive open tomorrow. Make sure your volume is good. I think it was. And NCR. This one you want to get ready to go short if it opens lower tomorrow. GLD. This one you stay short. Let's get this to where we can see it. Notice the left-right combo, gap down. They haven't been able to get back up above the T-line and did a little kicker type signal today. They're still taking it down. Where should they be taking it down to? Well, you can see there's a trend channel in the making, so this would make this down here is our next target. SLV, same scenario. You're still in a downtrend. Let's see, S.FCX. This one has to open higher and trade higher to stay long. If it opens lower, you've got this bearish engulfing, and now they're trading back below the T-line. What's that telling us about the trend? Telling us this downtrend is the factor, not the breakout into wave 3. Bidu, this one has to open higher also. If it opens lower, pretty much tells us they hit a double top up here. And if they open it lower, back to the T-line, you're still in the sideways mode. You want to be trading someplace else. It needs to open higher and trade higher to try to break out through this range. CELG also needs to open higher. Looks like it's trying to go back to the top of the trading range. Use the T-line as your stop. HMSY, big move here, consolidation. You definitely want to be buying this one on the J-hook type pattern. Remember, the bigger the signal, the more compelling there's been a drastic change of investor sentiment. This one, put a star next to this one. That one's a good-looking chart because it's giving you the information. Big change of investor sentiment, came back down into the support area and now coming back up. I would suspect the 200-day moving average being the next target. TPLM, also has to open higher and trade higher. If it trades lower, it's telling us this downtrending channel is in control. All you want to do here is stay long, but I'd use the halfway point of this candle as my stop. It shouldn't come back down through this direction. It needs to be trading flat and higher on tomorrow's trading. At Doji Star. MTG, if this opens lower, you want to be going short. That tells you the next target is probably down toward the 200-day moving average. That's based on this evening star signal that failed at the 20. And Jern, that's your sell signal. That's your belt hold, bearish belt hold. Try to take it up. If they open this lower, they're probably coming back down toward the 50. Beat is a good example of why you want to have your stop set at least below. It shouldn't come back below the T line, especially after a doji. In this case also, with a doji up here in the overbought condition, if you set your stop one tick below the low of that doji, if they come back down through there, they pretty much tell you the bears have gotten control after a doji in the overbought condition. That tells you definitely want to be out of that trade. RCON, stay long as it stays up above the T line. And EMC, this one I wouldn't be long or short. There's nothing there. There's no trend. This is where I'd move my money out to someplace else. Forget UEC. UEC, this one I wouldn't be afraid to be buying using the T line as your stop. Just make sure your volume's good. And Cisco, I wouldn't be in this one. You can see where the trend is. It's down, and they've gapped this way down. I think you're still in this downturning channel. If you're anything, you'd probably want to be short, but at this point, with that big move to the downside, I'd probably be taking some of the profits on the short side. ABBV, this one, you want to see it open positive and trade positive tomorrow to stay in it. You've just come off a doji sandwich. You don't want to see this close back below the T line, but if this came back down through today's low, I'd close it out and then buy it back on the next buy signal. Another element of, I would always hate to take profits because, man, what if I sold and it started skyrocketing without me? What I discovered is you sell when it's time to sell, and you can always buy back when it's time to buy back. There's that slow curve. You closed up above the T line or above the 50. They gapped it up through the 50. This one I wouldn't be afraid to be buying on positive trading using the 50 as a stop. And FXI, all you can do here is stay long until you see a sell signal. If this opened lower tomorrow, I'd probably take my profits. Notice how far away not only are you from the T line, but from the 3T line. And that's this little indicator right here. But if they open it lower, they're probably taking profits. You want to get out of the trade, and you can always buy it back. JKS opened higher today, did a doji. If this opens positive tomorrow, notice where it's gapped up through this uptrending channel right here. That tells me there should be a new dynamic. If I owned it, my stop would be at today's low. Shouldn't come back down through there. And LNG, having a hard time getting up through the top of this channel, but you stay with it as long as it doesn't close back below the T line. And BBY, this one I wouldn't be long or short. As you can see, they're having a hard time getting out of this range. I'd be somewhere else right now. And EEFT, this one you can be buying, especially on a positive open tomorrow. Also using today's low as your stop, that little hanging man signal. But to stay long, it needs to open higher and trade higher from here. Same scenario here. This one has to open higher and trade higher. If it trades back below the T line and want to close it out, it tells you they've lost steam. PRKR. This one needed to keep popping to the upside. Now you've got a bearish engulfing signal. What you might be seeing is a J-hook type pattern. So if I own this one, with it being this close to the T line, I would probably hang on to it as long as it doesn't close below the T line. If I was going to be a buyer, I'd definitely watch to see what type of signal it does if it bounces back up off the T line doing a J-hook. SB is a case where when it came open right here on the 50 and came back up, it looks like it's failing here at the T line. If it opens lower tomorrow, you close out the position. It needed to open higher and trade above the T line today and or tomorrow. XRS, there's your J-hook type pattern. Up, and there's a little J-hook. And this next move should be the same magnitude as that move right there. And what did I just do? XRS. RVBD. Stay long. But say stay long. Use the T-line as your stop. It's still showing good strength. Sure. Another one that has to open positive and trade positive. Even though it doesn't have a sell signal today, if they trade it lower, it's pretty much telling us you hit a double top and you shouldn't be in it anymore. You just wait for the next buy signal. And so did we do XRS, RBC? Sure. Okay, we're down here. FMI. This one needs to get up above the T line. It hasn't really done a reversal signal. This is why I'd be more suspicious about it coming through. If you see an up day like this, remember that's just an up day in a downtrend. You don't want to buy this until you see a definite close above the T line. And PFMT, Hammer, Doji, bullish confirmation. I would suspect your first target is right here at the 200. Now, if I see them stretch out to get up to a resistance level, if it hit right here, then I'd flip over to my 10-minute chart and see if they're selling it off or they're planning to go through. If they're starting to sell off on the 10-minute chart, telling us they're failed at the 200, you take profits, but then you can always put a buy stop right up here. That if they pull back and then all of a sudden go right back up through, that tells you the profit taking is over and you want to be back in that position. Apple, this one's not good. With the close after kind of a bearish harami and confirmation closing back below the T line, I would suspect that if you draw a line right down through here, that over the next week or so, they could bring it back down to the 50-day moving average. And CPRT, you're still in a downtrend, having a hard time getting up above the 20, the 50, and staying above the T line. Valero pulled back but didn't do anything. It would be a sell signal. Stay long. Again, there's your J-hook type pattern. You stay long until you see a sell signal. First of all, you have to see a sell signal. Facebook has been getting whacked here a little bit. Notice it's had a blue ice failure. This one I would be short, anticipating that if they've come down through the 50, came up and failed at the 50 with a gap down from a doji, that your next target to the downside is probably down to the 200-day moving average, which makes for a very significant trade. GDP, same scenario. Stay short Until you see a buy signal, I would suspect the 200-day moving average is the target. PACD. Here's your scoop pattern. This one has to open higher. This is kind of your scoop with a possible J-hook pattern. Should you have closed it today? This, to me, is telling you that you're closed close enough to the T-line to stay with it, but it has to open positive and trade positive. If it starts trading lower tomorrow, you close out the position because now this becomes the predominant trend. KERX, you should have closed this one out today. This one needed to open higher and trade higher. This one should be closed. GME, this one should have been, this one you give one more day because it's come back toward the 20 before. This one needs to close back up above the T line, though. If it opens lower and starts trading down, close out the position. IBM, this one you can be buying. This is the typical where they come up, they hit the 50, pulled back. Notice they couldn't close it below the T line. Now they've gapped up through the 50, which tells us the 50 is not acting as resistance anymore. There's going to be some more upside. And where did I get lost here? Oh, way over here. Caterpillar. Caterpillar to me is just, it's nothing you want to trade. There's not enough room, even hardly for option trading. I would definitely be someplace other than Caterpillar right now. WIBC, stay long. Notice you've broken out through this level on a J-hook pattern. There's going to be more upside to this one. Notice how the up move started with your kicker signal, your consolidation, your J-hook. Now you're broken through this level. Pretty much tells us the bulls are in control. An IBCP, nice J-hook. Notice the pullback here. Big down day, up day, smaller down day, doji, right to the T-line, and then bam, a gap up. This whole pattern is telling you you're still in an uptrend. This pattern right here told you the selling was getting smaller and smaller and smaller, and bam, they told you which way they wanted to take this one. This one has to open higher and trade higher to stay in it. If it opens lower, might not tell you it's going down, but it's telling you they aren't going up. You want to close out the position and move on to someplace else. Coffee. Coffee might now be starting back in its uptrend, but the uptrend, I would suspect, is back up to the 50-day moving average. So this needs to move higher. We've been trading sugar recently, but it covered the short position today with the gap up above the previous day's open. And forget what is going on in soybeans. Soybeans was tough to trade. It's caught here in this sideways mode. Tesla, more downside. No, not at this point. The option strategy was right in here. Now you've used up most of that option strategy. You're not too far away from here. If you are going to buy puts, you're a little bit more diligent because you're already a little bit over or in the oversold area. I would suspect the 200's the target, and it could get there in one day looking for a bounce. Bonton. This one, all you can do is stay long as it doesn't close back below the T-line. SPWR, also toppy. It has to open positive. If it opens lower, tells you the bears or the bulls aren't there, the bears are in control. More than likely, you're going to move choppy until the 50 catches up to you. MTOR. This one you can be buying, but I put my buy stop one tick above today's high, which tells you the bulls are in control and the 20 is not going to act as resistance. VJet, all you can do here is stay long until you see a sell signal. That's a skyrocketer. VISN is going to open lower, but I suspect it's not going to open below the T line. So you continue to hold this as long as it doesn't close below the T line. Because from what I could see, the earnings weren't bad. They may not have been as great as what everybody was hoping for. But as long as it stays above the T line, you want to stay with it. MTDR, this one's your bearish engulfing signal right at the T line. It also has to open positive to stay in it. QIHU, I wouldn't be long or short here. This one is in the sideways mode. There's just no direction to it. SFUN. SFUN, nothing here to tell you the uptrend is over. Just stay long until you see a sell signal and a close below the T line. CSTE. CSTE, if it opens positive, you want to be buying. The profit taking from today is over. You're still in an uptrend. If it opens lower, you don't want to be in this one anymore. CBI, another one that has a left-right combo, which means the T line is your last factor for the uptrend. It has to open positive or at least stay above the T line tomorrow. If it closes below the T line, you close out the position. Why here versus somewhere right in here? Because this is a bearish signal, a bearish Harami confirmed, by the left-right, giving you a lot more strength that there's been a change of investor sentiment. TLT, I think it's a 30 or the 20-year note. The bond prices slowly moving back up. As you can see, there isn't any real change of the direction over the last 3 months, which means interest rates aren't going anywhere. Amazon. You got a left-right combo. I would suspect it's going to come back at least test to 50. If you're a longer-term holder, you stay with it as long as it doesn't close below the T line. And Netflix has just not impressed me. Even though it's in an uptrend, it's a very slow uptrend. I'd rather be trading someplace else. Bidu also needs to open positive. If it opens lower, it's coming back to the T line, but still indicates that you're probably stuck in this sideways mode. Trulia also has to open positive to stay in it. If it starts trading back below the T line, it's coming back down to the 200-day moving average. Boeing. This one, if it opens lower, you close out the position. It's coming back to test the T line at least, but notice that they gapped it up and now started selling it off. It needs to at least trade as a doji. So I'd be ready to take some profits on weakness. If it opens positive, obviously you stay long and then you just put a sell stop at where it closed today. It shouldn't come back down through that level. Abercrombie, I saw news that there was a possible takeover of them, but the chart isn't really telling you that either. So it's probably just rumors. But this is one I wouldn't be long and short. Your stochastics even show you're going absolutely sideways. OXBT should have been closed out today. It had a wedge formation. It needed to come back up and close above the T line to keep that wedge formation. More than likely now they're coming back to test one of these levels. FedEx. Also, you might close out on a lower open because you had that gap up doji. Now they're taking it back down. Tells you that might be exhaustion versus enthusiasm. LNG, another one that has to open higher and trade higher. If it opens lower, that bearish engulfing will be confirmed, as well as ACHN. I wouldn't be long or short this one. There's nothing there. And Las Vegas Sands. Las Vegas Sands also running out of steam. If you're long, it has to open positive and trade positive. If it opens lower, it means they're going to run it sideways until the T-line catches up, which means there's nothing there to trade. Let's see, we did SWIR. This one you want to definitely be buying on a positive open tomorrow. We did Jern. TITN. Whoops. TITN has to open positive only for the sake of telling you that this slow uptrend is not remaining a slow uptrend. If it closes relatively flat tomorrow, you close out the position. You can always put a buy stop at 1860. If it comes up through there, you know they've broken it out to the upside. CRM, big bearish engulfing. This one should have been closed out today. If not, if it opens lower tomorrow, you close it out. You can always buy it back if you see a buy signal to close back up above the T-line. Another bearish engulfing. That if it opens lower, where did this come from? Close it out and just see what it does when it's back to the T-line. Stay long, as long as this stays above the T-line. Slow uptrend. Yeah, don't want to see it close below the T-line though. And line. There's nothing in this chart right now that tell me I'd want to be long or short. There's nothing there. Same with this one. You can see the wedge formation. I wouldn't be long or short right now until I see a breakout one way or the other. LRN. Stay long as this stays above the T-line. That's still a nice little slow curve moving in the right direction. LinkedIn. LinkedIn, another one that has to open positive. If it opens negative, this is the predominant trend, which is they're probably going to bring it back down to the 200-day moving average. Anytime you see a gap up and then they bring it back down through that gap up, that tells you the bears are back in control. But this one has to stay above the T-line to stay with it. And what do we got? CMS. I don't know what I just did, but it's probably not good. CMS, stay long. There's your little hammer type signal, gap up. If it opens positive, you can still be buying with the anticipation of wave 1, wave 2, going into wave 3. BSTC. BSTC. Stay long on this one. Notice they haven't been able to close this one back below the T-line at all. Let's see, we did ANR, right? ENR should have been closed out today. AUY. Stay short on this one. Notice they haven't been able to get it to close above the T-line. There's your left-right combo. I would suspect there's your first support. If it breaks 9, that means your trend channel becomes the next target. CYCC, stay long until you see a sell signal. This one didn't close halfway down the candle, and it also didn't close below the 3T line. Stay with it until you see a sell signal. At this point, I'd probably use this level right here, which would also equate with probably the T-line tomorrow, as my stop. I wouldn't want to see it close back below that level. And Fang had a kicker signal. You stay long as it stays above the T-line. Okay, what do we got? TC2000 is the easiest to work with, but Metastock's also pretty easy to work with. We'll probably be doing some more Metastock promotion or information system or demonstrations here pretty soon. What am I doing wrong here? CNDS is just not working. So CSUN should have been closed out yesterday with the close below the T-line. If you still owned it, it needed to open positive and trade positive. It opened positive, but as soon as it started trading back below the close of yesterday, that's when it should have been stopped out. And STX should have been closed out today, or you give it one more day where it better open positive. But at this point, if it doesn't open positive, notice what your trend is. It's probably sideways back waiting for the T-line. Scotty's gotten banged here the last couple of days. More than likely, it's coming back to test the 50 before they can get it moving back up again. Oracle, all you can do here is stay long until you see a sell signal. Dust had a good-looking chart. Bullish engulfing, little J-hook type pattern. I would suspect at least a bounce up to the 200. And GasX. This one, I would rather buy knowing they got up through the 50. Notice it failed at the 50 here. Pulled back to the 20, did a Morningstar signal. If it opens positive, you can be buying it. That tells you the 50 is not acting as resistance anymore, coming after a Morningstar signal. And data, this one you can be short on weakness with the anticipation that it's coming back down to the bottom of the trend channel, which puts you way down here somewhere. FSL. Stay short on this one. Notice how when they moved it sideways very indecisively, now you have your left-right combo. Even though you're in the oversold area, you're still in the downtrend. Remember, just because you're in an oversold area doesn't necessarily mean that's time to cover your short. All that means is you're a little bit more diligent in seeing or waiting for a buy signal. Here's another one that's come up and failed right at the 50. If this opens lower tomorrow, you close out the position. It's going to be coming down at least to test the T-line. We did Amazon. Let's see, NYSY. So, J. Cook. Try one more. NYSY. NYSY. Nah, that one's just not working. Okay, I guess we got most of them. All right. Jimmy, the options course is to teach people, just like candlesticks, to teach people how to use effective option strategies for the appropriate patterns. Not every option strategy is good for every, let's see, there was that NYSY. Whoops, the other way. NSY, yes. This one you can buy if it opens positive tomorrow. It means the profit taking is over and the bulls are still in control. So again, it's teaching people how to trade effectively. Doesn't necessarily mean that all the picks we put out for option trading is going to be picks or successful picks. But my strategy or my modus operandi through the years has been that I'll have 3, 4, 5 option trades on, and I know every single one of them is not going to work. But unfortunately with options, if you've got a losing option trade, you might be down 7, 12, 15, 20, 40% on that trade when it goes bad. But on the other side, if you have a couple that are successful, you might be up 2, 3, 5, 7, 800%, and it covers a lot of the bad trades. Isn't market at turning point rejecting 1600? We don't know whether it's rejecting or not. Yeah, for all we know, tomorrow they gap it up and take it up 200 points. So until we see a sell signal confirmed, we'll stay with it. Oh, it's INSY. Let's see. INSY. That's ugly. I mean, no, I wouldn't be long or short this one. Bought, brought yesterday, closed today because the stock closed below the T line. Should I put my stop loss at yesterday's doji low so I wouldn't lose as much money? TPLM. Yes, yes. TPLM. That would be a toughie. If you were aggressive on this, yes, if it opened positive, I would have had my stop at today's or yesterday's low. But the fact that it closed below the T line, I probably would have closed it out coming back down to the T line. Now, and we will say, well, should you use the T line on the close or intraday? If it's moved that direction after a doji and trading back below the T line, it's probably going to create, unless they can bring it all the way back up, it's going to create a bearish engulfing signal. I'd probably want to be out. Worst case scenario would be close it out at the T line, it comes down, hits the 50, and comes back up through the T line. You can always buy it back because which way is it going at that point? It's coming back up. You can always be buying it then. Okay, let's call it a night. I've kept you way past your bedtime. All right, we'll see everybody in the chat rooms tomorrow. Have a good evening.